Hello, good morning, traders. It's me, Darius Dargo, and my friend Junid Vahid on the second camera. We invite you to a session which will be mainly devoted to trading, but of course we will focus on mainly on this what's gonna happen today at 12 o'clock London time. It means that we have the Bank of England interest rate decision. Hello, Junit. I know that you had a panel. How are you now?
Hello, Darek. Feeling great. Thank you very much. Just finished with the panel discussion with Frank and Nenad. We discussed a little bit some ideas for Bank of England decision. And I'm here. I am allowed to share my opinion here on this session, as previously I was a host and generally managing the session between two experts, so I was not biased there. But now with you, we can discuss anything that our viewers are interesting. Feeling great, ready to trade and discuss the markets with you. How are you doing?
I'm doing well. I had some luck yesterday. I had some trades opened on yen. I was shorting dollar with yen for many days. I couldn't get it, and yesterday, due to the decision of Bank of Japan, yen started getting stronger. And luckily, I closed my old trades, which I was keeping over 2 months or even 3 months. But so I'm really satisfied that at the end I could close those things. But of course, times yeah, times runs on, and now another event is important. Bank of Japan is already behind. We had Fed decision yesterday also behind. Now we have the Bank of Japan, which will be in 2 3 hours from now. Uh, we generally expect that Bank of England will cut the rates. Yes, the question is how the market will treat it. Is it gonna be a non-event that market is already priced in this, or maybe they're gonna say, okay, England is cutting the rates. Let's weaken the pound because it's getting less interesting because it will be 5% and uh, United States, the Fed is keeping rates higher, 5.5. So pound should be weaker. Do you think it can happen, or maybe market already priced in this situation that there will be interest rate cuts, and this is the effect of the expectations of the cutting the rates, and maybe they will just try to test this trend line and then start growing.
Um, I'll answer it in a little bit different way. Bank of England is a major central bank, and in order Bank of England to take decisions what they will do with their monetary policies, they must look the economic conditions first. Because if economic conditions are getting really bad and they are not there where they want to be, they might just get forced because of the bad economic conditions. If they are already there where they want to be and the economic conditions are getting worsening, then they might support their economy, but they might be very careful because the outside the global monetary situation due to increasing the gap between the different major central banks can also have a bad influence to their monetary policy and economy. So they will try to stay in between the major central banks. US right now has 5.25% interest rates, 5.5% interest rates. UK has 5.25% interest rates. Europe is way lower because there was a lot of recessions, a lot of economic issues, and they have no liquidity, so they had to cut interest rates. As predicted before, they already started doing, I think, second rate hike. And Bank of England, in my opinion, will cut interest rates for sure because they already sitting in their 2% goal for a long period of time. The reason they were not cutting interest rates was in order to avoid future inflation spike and not do fast premature rate cut, which may signal to investors and people that situation is very bad and this could have negative effect. So they are doing it gradually, they are going to cut interest rates this time because the inflation is at 2% goal, and or other central banks are cutting. US is expecting to cut. I don't believe that they will wait USA to cut interest rates so they can follow. I think this time they will cut interest rates. It's widely expected that they will cut interest rates. So we need to think it in this way, how that's going to affect the currencies or the instruments. Usually it's bearish for the currency, okay? All else being equal, if they cut interest rates, of course, the interest rates are dropping, and there will be less interest from carry trading. Let's say if somebody borrows from Japan for a cheap interest rates and put his money in the UK for a bit more expensive interest rates, now that's getting less attractive because they are getting into the rate cut cycle to support their economy growing because their GDP is bad, employment it's not good, the job market is really problematic there, and they will have to support it. And the way to support from the central bank side is to cut interest rates, maybe print money like QE, and these things will help their economy. It's inflationary, but given the fact that they need to choose, are they actually want to risk recession and deep recession, maybe even deflation, if they continue to hold interest rates in the higher levels, or they are fine to support the economy and find a way to control the inflation in the future with imports and exports, and also collaborating with other major central banks. But the situation is tough, and that's why the decision must be uh, uh, taken as fast as possible due to worsening economic conditions. So cutting interest rates, in my opinion, definitely will be bearish for UK, and that's some UK's currency, and that's kind of a goal because very high interest rates and strong pound are harming their economy due to their service exports as financial service exporters, which means that lower currency will help their like exporting as not so much, but a little bit better, and economic conditions will improve. And even inflation jumps a little bit, maybe in next year or so they will keep an eye, and if it needs, they will take decision to control it again. Um, Pound, it's not going to go up or down by its own. It's going to be traders and markets are going to compare that to the other currencies that is going to be traded. So if they cut interest rates, pound will drop. But as you said, it is priced in big time. Maybe little more drop. It's quite possible. But the closer we get to the next September decision of Fed, the more I will basically see pound going down against US dollar because cutting interest rates from USA, it's stronger decision than cutting interest rates than UK, since that's the bigger economy and have the most influence to the global economy. So in my opinion, it's a tricky to say, but I definitely bet on the sell side, and maybe on the deep levels like 125, maybe 126.25 levels, where we are getting close to USA decision, then we might see stronger rally based on US dollar weakness. It's not UK strengthening, but
Yeah,
I'm
yeah.
on the bearish side. Even it's big time of the big part of the rate cut is priced in. I think there is still more to go down.
Technically, it looks that at least they will try to test this trend line, which is not so far away. It's only 25 pips. I think this is imminent. This will happen. The only question is, are they going to break through or make a correction? Because they already, for last 3 weeks, there were only declines. When we look at the weekly chart, let me show it. On the weekly chart, we see three black crows, yeah? So dearly, because of the last candle, this week candle is really full body. Of course, this week is still not finished, so it can change. Tomorrow is the end of the week, but it looks that even as you mentioned, 25 could be the target, 24, 50. Uh, this week is at the moment is closing on bearish. When I was observing such situations before, usually when there was a first sign of bearishness on the MACD, and the next week was usually also bearish. So technically, it shows me that there could be even this type of slide down. But of course, first we need to see the numbers if they cut 25 or not, because it might happen they will not cut it. It also happens. There are, as I remember, 7 members or 9 members are voting. 9 members. Nine
Nine.
members are voting, and it's a kind of um, gambling. How many will be against cutting and how many will support cutting? So it's, if it's 5-4, it will mean that that one side wins, but it still means that there's no consensus, typical consensus that 9-0. Yeah. So it's also worth watching after the data comes, watching what was the proportion between the voters, who was against and who was supporting. So generally, yeah, I'm waiting. I'm waiting for the data calmly. I'm not trading it. I'm just watching it. Maybe this is something which could be prolonged at least to this trend line. What's interesting, I'm comparing the situation on pound with the situation on dollar with yen, where we had also a trend line, which was a long-term trend line. It's lasts for over a year or even half a year, 1.5 years. And look that they hit it yesterday, or let's say today in the early morning, and rejected. So look that this rejection is 120 pips. It's really a strong reaction, and it's the only reason that they made the rejection is this trend line, because there's no supply zone, no demand zone, no support resistance level. It's just only a line in the air. And they just touched it and reversed. I understand when I see a reaction on a support resistance level where we definitely we had a strong resistance here, we had a strong resistance here, and then market started treating this resistance as a support. Now that the support is broken, and I just wonder if they so strongly respect this trend line, it might be also that they will be respecting the support and resistance level, what means that maybe even they will try to make this type of correction and then maybe try to break it. So it's very possible that the dollar with yen will pull a bit higher. I was watching the bond yields in USA, which went nicely down. When we look at the bond yields at the moment in USA, look, they are 4.05, which means that the tendency is very obvious. They are falling and falling. At the moment, the bond yields are at the levels of March this year. And when we look at yen, what yen was doing in March, yen was already higher. So I would say that at the moment, dollar with yen is falling faster than the bond yields. So it might be that they're gonna correct this correlation and maybe pull back. So I'm not at the moment thinking about selling yen. I'm even thinking about entering this correction up to this support resistance level. And coming back to pound, pound is also is gonna test an important trend line. This is also a bottom of a kind of a channel. So I think that something can happen here. It might be a tricky moment that market starts falling. Traders will join the sellers, and then we see a price reaction here. So what I would advise, uh, take care about these levels, those levels, because it might be something which might be a big surprise for traders. Of course, if they break through, then probably this is the next target. Here we have a strong demand zone, and they might try to reach this area. But that's my opinion on pound. I see that Dan is asking about pound with yen, and Yanis is asking about gold. Okay, we'll check both things. But because we are discussing pound, let's take a look at pound with yen. I have an old trade, one of the oldest trades, still not closed. And I hope that during this pound decision, I would like to see them here and close my long-term trade. By the way, yesterday the trades I closed were over 120 days old. So, this is the last old trade I have.